Hello, welcome to my YouTube channel. Today I'll be talking about how to trade the markets. Generally, in the markets, we always trade according to the movements, and there are two types of movements. Right from here, this is called uptrend. This is uptrend. Uptrend normally has formation of high highs and lower highs, high highs and lower highs, which these show the characteristics that the trend is moving to the ups. So what we need to consider is to see that the market is forming these levels here, the level of high, the level of low. Also, we need to see the price breaking here with the candle to signify that this is an uptrend. Also, also market forms a downtrend if the market is going to the downside. And normally the market looks like this. The market will be forming consecutive trend of lower low, because when we consider this, we need to see the market breaking the lower lows, the lower lows, the lower lows. And these are the lower high, these are the lower high, these are the lower high, and these are the lower high. So this type of market is called downtrend. And there is another type of market which the market is forming a range. It's moving in the same place. The market is forming a range whereby the market is moving in the same place. The market is moving in the same place. Traders normally trade this type of market by defining the support and the resistance level, believing that the market might come here at this imaginary level to test it, then come back to test it, then come back to test it. This is how the ranging market usually trade. But for us to be in a high probability, we need to refer trading with a market which is forming a market which is forming high highs and low high. Prevent this prevents a lot to be stopped out from the market, because you never know this level. You never know this level. This imaginary level can be broken or what? Because sometimes the market might come and break the low, then the market come in the same place, then retest, then it moves to the other place. Or the market can break this low here, can break this, can make a move and break this low here, and then make a retest. And sometimes it can even make a retest and break it. So for us to be in a safe place, we need to trade according to the to we should trade according to the trend of moving to the upside or moving to the downside. So we trade the price when it shows us that the price is getting to the downside. We trade the price which is moving to the lower side. So to avoid getting stopped out every time, we need to focus on this type of market, because the general idea of forex is these charts are compared against the price. So it's better for a person to take care on the price when the price is moving to the downside, or when the price is moving to the upside. But when we focus on the type of market which the price is just consolidating, it's very risky for a trader to be benefited from that type of trade. So without wasting time, I like to show an example of uptrend, and I think we'll look for another pair which will be better. I think I'll take my example on the volatility index chart. Okay, this market structure I've used it considering the 15 minutes, but that's not the concept which I want you to understand. I want you to understand the concept which I explained it by using the drawings. So those drawings are more likely to confuse people, because when people see people saying that we are trading the market which is going this way, they normally like to see they normally imagine that the market can do the same as we draw in these drawings, but that's not real. The market is very confusing, but we can see how it is trending, because we say that on if the market is moving to the downside, it means that the market is creating lower lows, it's creating low lows, it's creating lower lows, and it's creating lower high, it's creating lower high, it's creating lower high. Okay, so I need you to take some time and think, where where are the point of lower lows and where are the point of lower highs. So I think I've already showed you those points. So let me just not waste the time and show this is a lower low, and this is a lower low, and this is a lower low right here. It's a lower low, and this is another lower low. Okay, this is just this is just like an example of down. Now let's look on the uptrend. An example from the chart regarding this uptrend. I want to show you a clear. Remember, guys, we need to trade the clear structures. We don't need to trade structures which are not clear. So a good example of an uptrend comes to this point here. Come to this point right from here to here. Okay, this is an uptrend because the market formed a low, then it formed a high, then it formed a low, then it formed a high, then it formed a low, then it formed a high, then it formed a low, then it formed a high. A good example of ranging markets can be the same as you can see here. can be the same as we can see from this point. This point right here. You see the market is forming highs which are equal. So this is a ranging market where market is forming a high, forming a low, forming a high, forming a low, and the market is moving in the same spot, meaning the market is moving in the same spot. And this is a consolidating market structure. Okay. The other thing which I can speak. Well, let me change the time frame and delete these, remove these drawings. So we can see this is a clear down move and this is a clear up move. Always trade the clear picture. Always trade the clear picture because the market, when the market is forming a high, then forming a low, then forming a high, then forming a low. This gives us enough opportunity of knowing where the market will give its next move. So in order to avoid the confusion which is showing by the candles, not get printed as the way as we show in the drawings, you can use the line chart. You can see that this market is forming a high here, forming a low, forming a high here, then market formed a low here, but I can't require this as a low, but I can just look on the major move high, low, then the market formed a high, then market formed a low here, but the market didn't respect. But it didn't respect because there are some other factors which we didn't discuss. And here is a low, and then the market formed a high right here. But the market broke this low right from here, then started to form a downtrend. So when the market let me give some explanation. When the market forms something like this, it's making a high, it's making a low, it's making a high, it's making a low, it's making a high, then the market makes a low, a new low which has broken the old low. This signifies that the market is changing the direction, which the same shit happened at this place here. You can see that the market formed a new low after forming form after market formed. No, this day after the market formed this high, the market the market the market the market made a low here. So in order for this market to be in the bullish move, the market had to break above this high here, then maybe the market could make a low here and then goes upside. That's where we could define that this market is moving to the upside. But what signifies that the market is not at the same move is after breaking this low here. And we see that the market after breaking this low, it came inside and broke again the this low here. Let me remove my drawings. I'm sorry, I'm not good at teaching. I'm just giving you concepts that you can understand. After breaking this low, the market formed a new structure whereby it made a low here, it made a low here, and it made a high over this top here. After making a high at this top, the market broke again. It broke the structure at this point. As you can see, the market after breaking the structure, it entered in the new formation, then the market went to the downside. So this signifies that this level is very important, and you can see the risk is too small here. So sometimes you may never know where the market will be going, but when you focus on this point, when you focus on the highs and lows of the market, can get some entries which are sure like this one. But because you see the market broke this move, so why will we take the profit? Normally we usually take the profit at the low which the market started in the up move. You can see that here this was the high which was made by the market. The market broke it at by this candle here. So this was where the original move started. So you can see that the market took the entry very clear, and the market broke this structure and entered it in the level, then moved. So this simple concept can help be somewhere where you can be benefited with the market. Okay, I think I'll have to prepare another video on how you can how you can get more confidence on the trend of the market. So the market shifted the whole trend by breaking this low. Yeah. See that the market managed to broke this low and show that this will never be an uptrend because the market has formed a low. So it has to make a lower high so that it can form another low here. You can see the market made a low here, then the market went and take some of the position. So the price was moving on the same thing. And remember, I once told you if the market is ranging in the same place like this one, where most of the traders are waiting for buying, buying at this level. You see, the market came and tapped at this level here, first tap, second tap was at that level there. Then the market also tested the same level. So you can see the market after testing this level, it broke through. You understand me? After breaking through this level, after breaking this level, most of the trader wanted to sell at this point. But this was not the sweet spot of selling this market because sometimes the market can come inside and retest and then move. So we need to know the general structure of the market, referring from the time frames which are very better. I mean, from the time frame which are from the bigger time frame. I can say it in simple language, bigger time frame, which will help us to know where the market will go because you can see here the market didn't hold this level. It broke this level, and the level was very strong at the first time because it had a test and it's had an impulse. Then the level was tested again and showed that it was strong, but look what happened. So in trading, we normally have to focus on many things. So you have to understand a lot of things which can help you benefit from this market. Thank you.